questions. Cash and profits. Cash is the most liquid asset. The most liquid asset. And it is always recorded in the statement of financial position. Statement of financial position. And what is the statement of financial position? Statement of financial position is that account that talks about the assets, the liabilities, and the capital of a business. So whatever the worth of the business, the value of the business is known through the statement of financial position. And that is where we record cash, which is a current asset. That's cash. We have other items that could make up cash. We have stock. This could make up of cash. We have debtors. What is stock? These are what the business sells. So, but stock you need to sell before it becomes cash. So how liquid is it? Depends on what cash is about. So these things are also can be turned into cash with liquidity. So liquidity is about the ease at which we can. This is a marker, right? The ease at which we can turn this to cash is what liquidity is about. So it simply means this can also be cash, but right now it is not cash until it becomes cash. So the ease, how easier it is for us to turn this to cash, is liquidity. So this will take us back to stock. This can be stock. This is what the business sells. The business has it in the store. If it doesn't sell it by cash, it is not going to record it as cash. Because most of the time, whatever we have in the stock, we could sell on credit, we could sell with cash. Yes or no? We have credit customers, right? Credit customers are the same as our debtors. Yeah, we can leave those things and understand the difference between cash and profit. As a business, you have your current assets. These things belong to you, but they are current assets because they are expected to be turned into cash within a short period of time. They are expected to be turned into cash within a short period of time. That's why we call them current assets. Examples are cash, stock, debtors. Are you with me? Now, cash. Cash is the money we have. It's the most liquid asset, which means what we can spend easily. That's cash. We have stocks. We have debtors. Now for stocks. Stocks are what the business sells. So let's assume this is what our business is. We sell markers. We will sell to customers who wants to pay and customers that wants to buy with credit. Yes or no? But both of them will be recorded as sales. Both credit sales and cash sales are sales because you have recorded them, you sold them. In as much as the customer has taken the liability of the product, then you can record it as a profit. If you want to sell this to me, while you are sending it to me, in the course of you transporting it to me, you don't record it as sales. You only record it as sales as soon as I collected the product and I accepted the invoice, the liability. Are you getting what I'm saying here? We call it the principle of prudence. You don't record your profit when the customer has not accepted the liability. We are still talking about cash. We're not going to profit yet. We're still talking about cash. Cash, the money you have. This can be cash. This can also be cash. Now, what's the difference between these and this? Stock are those goods that we have to be sold. They are about to be sold. Not until they are sold, we don't have the cash. So we sell some with cash, then we have cash. We sell some on credit, then we have debtors. So we have credit sales, cash sales. Cash sales means we collected the cash while selling. Credit sales means we sold without collecting cash. These will be through receipts. This will be through invoice. Credit sales goes with invoice. That's the business document. Now we're going to business document, another topic entirely. Credit sales will be through invoice. That's the business document for credit sales. A cash payment will go with the receipt. Receipt and invoice are not the same. Receipt is an evidence of payment. Invoice simply means that I have received these goods and I'm going to pay for them at a later date. That is what an invoice is. Are they the same? Are they the same now? This means I've bought on credit. This means I paid. Evidence of payment. Evidence that you are owing me. Now going back to cash. As soon as you purchase, as soon as you sold these goods to your customers, you record it as sales. Yes or no? So when you record it as sales, it doesn't come to your statement of financial position. It goes to your statement of profit or loss. It goes to your statement of profit or loss and other comprehensive income. Cash sales, credit sales are sales. You sold the product. You don't record it here. The only thing you record here is cash. Because cash is what you have as a business. Whatever you have that's going to stay with you for a short period of time or for a long period of time is going to be recorded in your statement of financial position. But the transactions you do, what you sell or what you buy, is recorded here. This is where money comes in. But whatever you use the money to do stays here. Do you get the difference here now? So whatever the business is, the work of a business is not through the statement of financial position. The transactions of the business is through here. Now, you sold. Credit sales and cash sales. You sold. Sales. As soon as you sell, it is expected to make profit from whatever you sell. Yes or no? So, profit is total revenue minus total cost. TR minus TC. That is your profit. TR is your total sales. Are you with me? Yes. TR is what? Your sales. Then how do you get your sales? Your sales is part of credit and cash. So it simply means you are calculating your profit with those things you have sold without receiving cash, and those things you have sold when you receive cash. So you sold product A, product B for $100. You receive cash of $50. You are expected to receive another $50. Yes or no? But your total revenue is what? $100. Because you sold the two products. And let's assume the cost of the two products is $80. So you have made the profit of what? $20. But in the cost of selling these two products, you only received $50 for one product. The other product has not been paid. But you have calculated your profit for both products. Do you see? So profit is not the same as cash. Profit is you talk about profit with statement of profit or loss account. You talk about cash in your statement of financial position. So which simply means a business might be making profits but still short of cash.
You mean when the difference between the cash is you pay.
Cash is what you have physically.
And profit of the profit you think you have.
Profit is no. The profit is what you make from your product, from the sales of your product. But it is not the same as cash because both credit sales and cash sales, you put them together to get your profit.
So just because you have a high profit doesn't mean you have cash.
You have cash, yes. Because here you have sold. You sold. We have two products, right? Yeah. A and B. These are the products. $50, $50. This is $100. But in cash, you have only $50 in cash. But you have made a profit of what? 20. But the only cash you have with you is what? 50 because the other customer hasn't paid. He's a debtor. Do you now see the difference between cash and profit now? Cash is a liquid asset. Profit is your revenue, your return on investment. So which simply means you might have, a business might tell you, or someone might tell you that, oh, I made a profit. And you ask for money and say it doesn't have. Because it doesn't have. You make profit, yes, but you don't have cash until this pays. So look at the situation here. You have debtors, you have stocks. These things will change. And as soon as they change, your cash changes. If debtor increases, it means a lot of people are buying from you on credit. It reduces your cash. It is negative in your cash flow statement. Does it make sense or not?
Yes.
These two are expected to be turned into cash. That's why we call them current assets. But what is the relationship between these two things and cash? This is your cash. These are your debtors and your stocks. Debtors are your credit customers. When they increase, your cash reduces. There's inverse relationship between debtors and cash. If your debtors reduces, your cash increases. Stocks. This is what you sell as a business. If your stock increases, your cash reduces. If your stock reduces, your cash increases. It simply means you are selling. So that is cash. And for profit, this is profit. Profit could be gained without you even having cash. Though it's still going to be your cash, but right now it's not cash because you have not received it. And that is why in the statement of financial position, you record it as debtors. So debtors, stocks, they have inverse relationship with cash. Creditors, they have positive relationship with cash. We have creditors. Creditors are your credit suppliers. When you increase your credit suppliers, when you are buying more on credit, it means you have cash with you. Do you get it or not?
Yeah.
When you buy on credit, so the amount of money you are supposed to use to buy, you are keeping it for the goods. You are keeping the money, but you are having the stocks. So you have more stocks without paying for them. So that increases your cash. But as soon as you start paying your creditors, your cash starts reducing. So creditors and cash, they have positive relationship. If your creditors are reducing, your cash are reducing. Your cash is reducing. If your creditors are increasing, your cash is increasing. So that makes cash different from profit. Cash is a liquid asset. It is recorded in your statement of financial position. Profit is recorded in your statement of profit or loss account. So in the exam, they might even ask you the difference between cash and profit. You don't only talk about the liquid asset. You could even tell them that cash is recorded in the statement of financial position. Profit is recorded in your statement of profit or loss account. Cash is an asset. Profit is part of your revenue. So these are the difference between cash and profit. So cash and profit will never be the same. And they are treated separately. Do you understand cash now?
Yeah.
Good.